A very good morning, everyone. Happy Sunday to all of you who are joining us at this KL Startup Summit Fintech track. My name is Wilson. I am from PolicyStreet and also the Fintech Association of Malaysia. Joining me is an esteemed lineup of panelists. So we have Ken from StashAway.
Morning. Hey, guys.
Morning. We have Aaron from Luno.
Hi, guys.
And Julian from AKRU.
Hi, everybody.
And we have Ben from ipaymy, who will be in these sessions. So we will be spending the next 1 hour or so to discuss on achieving financial wealth via fintech solutions. So I know it's a Sunday morning and it may not be the most optimal time to talk about achieving financial goals on Sunday morning, but we'll make sure that it is an interactive and engaging sessions because we are in this tech-driven era. And I believe that this agenda is very important, especially to the Gen Y, the millennials, as we are undergoing through the proliferations and advancement of technology, IR 4.0, and venture tech especially, where it has created a lot of new and innovative avenues. And we are talking to the leaders of these respective financial solutions, where it will be able to help all of us to achieve our own financial goals. The question here is fintech solution better than conventional solution when it comes to achieving our financial goal? What are the pros and cons that one should take note of? And of course, in this forum, we will be opening up Q&A if there's any questions as well, because we really want to hear from industry insights and also practitioners when it comes to this topic. And this session is also very timely because SC recently has just held a conference on releasing their recent annual report. And we are seeing a lot of retail participations in the stock market, in the RMOs, avenues. And this also represents that there is a sharp interest into investment, into achieving our financial wellness and goals. So this is where we will be able to go through a few questions with our esteemed panelists to hear from them how do we take advantage of fintech solution to help achieve our financial goals. All right. So before we start into our forum discussions, I will just invite our panelists to give a short introductions about themselves and company. So perhaps Ben, would you like to start first? Ben, you're on mute.
Hi, my name is Pradeeban, country manager for ipaymy. So essentially, ipaymy, we are a cash flow management solution. Essentially, what we do is we enable payments of various categories whereby that business users can't usually pay for, such as their payroll, rent, and invoices. Essentially, what we do is we are a solution. We provide the option to business owners to make these payments using their commercial credit card. Yep.
All right. Thank you very much, Ben. How about you, Julian?
Hi, I'm Julian from AKRU. I'm one of the co-founders of AKRU, and what we are is in the category of robo-advisor. Robo-advisor basically makes investment very easy, very cheap, and it really, the advisory part is that it calculates for you the kind of numbers or required savings that you need to achieve the various financial goals that you have, including things like retirement, buying a property, and even real savings. Yep.
Thank you, Julian. Can I invite Aaron?
Hi, everyone. My name is Aaron, and I represent Luno. Luno is the largest digital asset exchange in Malaysia. We are the first regulated one by the Securities Commission. So if you want to buy Bitcoin or digital assets in the safest and simplest way, you can come to Luno.
Thank you, Aaron. And last but not least, Ken.
Morning, everyone. My name is Ken. I'm the country manager of StashAway. StashAway is a regional robo-advisor, and collectively we manage over 1 billion assets under management. And yeah, I'm looking forward to having a great panel with all of you.
Right, thanks everyone and welcome aboard to this panel discussion. So I'll start with the first questions and I would like to pose this question to Aaron and Ken. So I'm going to start with Aaron. So essentially, the term financial wellness can be quite confusing, right? Of course, we are quite well aware about the term financial freedom, financial goals, but I would like to hear from you, how do you define achieving financial wellness, especially when we are at different stages of our lives? And of course, the related question will be, is there a difference between financial wellness and also complete financial freedom? So perhaps, Aaron, you'd like to give your sense of thoughts.
Right. So these are my personal, I'm sure if you speak to personal finance advisors or licensed financial planners, they may have like a standard definition of what is actually financial wellness. But for me, my belief is financial wellness is being in a situation where you feel stable and secure with your finances. Now, this does not mean that you have zero loans or that you're a millionaire or anything, right? This is just a state of mind where you are already comfortable and you feel secure and confident about your finances. So if you contrast this to the term of financial freedom, I would define financial freedom as you do not have to work anymore. Yeah, your passive income is more than your expenses. You can literally just sit on the couch and Netflix for the rest of your life and you would still do fine. Yeah, to me, that is financial freedom. You do not need to be financially well. You do not need to reach that level of financial freedom to be financially well. That is my belief. Like, if you have a job that you're comfortable with, you're earning well, you have savings, you are investing well, and you have good relationships with your friends and family, and you have good work-life balance, to me, that is financial wellness for most people.
All right, thank you very much, Aaron. What do you think, Ken?
Yeah, as a robo-advisor, I think, we face a lot of questions like this, and it doesn't help that every year there's new terms that get introduced, right? FIRE, financial wellness, is also relatively new. And then new asset classes that come to play, new stocks that rise and fall. So I think having your own point of view, your own definitions about things really helps your own state of mind, as opposed to having to force update that OS and then bring on new stuff that might actually throw you off track. To me, financial wellness is like having a good diet, right? You have a balanced diet, you feel good about yourself, no allergies. So similarly, financially speaking, financial wellness is the good habits that you've put in place to reach your financial goals, right? So having reasonable levels of debt, having good income, investing for investment goals that you have already quantified and prioritized. So all those things are good habits that you should put into place. And then financial freedom is, like Aaron said, I see it more as a destination. Once you're there, you have the option of doing whatever you want. You have that freedom to continue working or traveling the world. Is completely up to you. I will say though that every year there's new things that come into play. So be very careful about how you use these things to fit into your lives, and hopefully one of these days you too will reach financial wellness. But don't get off track by all the cool, shiny, sugary bits on the side that might come your way, whether it's NFTs, coin scams, or whether it's GameStop, things like that, right? So you have to keep on the straight and narrow. And I'll see you along with all these other panel members at Financial Freedom.
All right. Aaron and Ken, both of you touched on one converging point. You both spoke about decision and also action, right? You touched on the point that one has to be able to invest well, to be able to make the right decision so that we can get on the track to be in the zone of financial wellness and with the ultimate goal to be financially free. So this leads me to my second question, and I would like to ask this question to Julian and Ben. I will start with Julian first because, Julian, in the investment market, we talk about time in the market, right? So Julian, you have slightly longer time in the market. I'm not implying anything about age or whatnot, but it's more on time in the market. You have seen more things in the entire financial market, perhaps in the past 15, 20 years. So I would like to ask you, tell us about your personal investment strategy, right? Just like Ken and Aaron, we were talking about investment decision, investment strategy. And more importantly and more interestingly, how has your own investment strategy changed, if any, due to fintech?
So I start first, is it?
Yes, yeah.
Okay.
Julian.
Now, I guess just to start from the current, present, and then we move back into the past. Actually, today, with the advent of fintech, and together with the internet revolution that has been happening for the last 20 years, the investment equation is set for us. I think that many products out there, from fintech, from invest-tech, from insure-tech, has already settled the investment decision for us so that we can live our lives. This is very different from the past where we had to so-called study the markets, and entire industries and even cottage industries, right, as you are seeing with the financial gurus, have been set up to tell you how to study the market. Actually, we don't need to study the market anymore because we can get into one of these products. You know, Wilson, you are in InsurTech, and your products and your service is currently being used to help people get to insurance very easily. And I'm sorry to forgive me if I'm rambling. For example, if you wanted to go for surgery, you don't need to study cardiology anymore, right? Or you never did, right? You just go to the specialist, the guy would do your heart for you, and that's that, right? But why is it that in the financial industry that people want you to study the market? I think it's very scamish, all right? But a lot of bad things can happen out of that. Now, the other thing I would like to say about investing is that everything is connected. All right, investing is connected to your consumption, to your lifestyle, to your way of living, which is also connected to the jobs that you have. And the jobs that you have are connected to government policies. Government policies are connected to how the world works, right? So in terms of this whole equation, spitting out a financial product, that financial product doesn't exist in isolation, right? It doesn't mean that you go out there, you study the market, and then you do better than others. Well, some of us may be lucky, but like for one lucky person, there will be hundreds of thousands unlucky people. So the best investment strategy is actually to plug yourself into this system, the global economy, called the global economy, do your career well, and your career usually has very little requirements for financial capital. All right, you're putting very little financial value at risk with a career. It's all sweat capital, but the returns that you can get out of sweat capital is exponential. And then you use those returns from your career to invest in the current investing paradigms that exist. Fintech is right now giving you this so that you can do that very easily. And I think that's the best way to invest. That would become my personal strategy. And you asked me about my personal investment strategy in the past. It's all wrong, right? I wish a robo-advisor existed in the past so that I could put my money in a robo-advisor, and then I focus on my career, I focus on relationships, and I focus on things that make me happy.
Sure, thanks, Julian. I'll come back to your point on, in a way, how do we start our financial investing or financial wellness journey later on. And I would like to hear from Ben. Ben, you run ipaymy and individual businesses. So has the proliferations of fintech solutions changed or influence your investing decisions and also approach?
Of course, personally, of course, usually generally everybody invests. I mean, you go into like properties, equities. I mean, now we have other options, right? Like you can go to crowdfunding, P2P lending. But what I like to tell also, right? I mean, we've only talking about investment, but I think the proliferation of fintech has also given option of financing. So for example, businesses can, I mean, ipaymy is a solution as well, right? So where you can use your card to pay for items that you can't usually pay by card, using your cash and extend your working capital. That's one option, right? And businesses can fundraise via invoice financing, crowdfunding, peer-to-peer lending. So I think, I mean, a good thing about the fintech world is it's making everything very transparent, especially when it comes to lending as well. I mean, how many of us here, like usually, when we go to take the mortgage, your banker throws in an MRTA and doesn't give you the option to actually take out the MRTA. Then they start telling, oh, no, actually, we don't take the MRTA, I can't give you this rate and all that. But no one actually knows that actually the bank is not allowed to do that, right? So that's when, like, companies like yourself, like PolicyStreet, actually educates people about insurance. Like, I mean, that's the thing about fintech. I think investment strategy wise, I think it is giving people options, but I think on the other side, it's also giving a lot of financing options as well. So people are more educated. You have options of cheaper financing solutions from perhaps I would say like the non-banks, which perhaps works better for certain businesses compared to the traditional banking lending products.
Sure, thanks, Ben. Yeah, you mentioned a few keywords, transparency, choices, speed, and I think these are all very important, and these are the fundamental values that fintech can provide. So I'm just looking at the Q&A chat box, right? Feel free to ask any questions to our panelists if you have any questions. And I also saw Aaron was typing away. He only took a few minutes for NFT. So you have to blame Ken. He was the one who brought NFTs. So this is linked to my next question, right? The market is excited because of the huge potential return that can be generated by all these new digital assets, new digital avenues of investment, and of course stuff like NFTs, or last year the DeFi summer has really opened up a whole lot of new opportunities. And from our daily reading, one would notice there are people who make a lot of money out of all these new opportunities, but at the same time there are also people who lose money because of lack of awareness or educations. So this actually is very important questions, and I would like to ask Ken and Aaron, or start with Ken, right? Because fintech is purely transacted digitally. So is there a myth, right? Is there such thing where one is able to get better financial return via fintech solution, but at the same time, as a user, am I exposed to greater risk? Of course, in the past, like what Ben was saying, right? If I were to deal with my banker physically, I can go through all the physical documentations. I can walk into a branch despite of less of a satisfying experience. But at least there is a face-to-face interaction. There's some form of comfort. Everything is properly documented. Whereas for digital solutions, for digital platforms, it is run globally. It is run 24/7 to some extent. So this question, I would like to start off with Ken. Is it true that, generally through fintech solutions, one is able to obtain a much more better and superior financial return? And secondly, does it come with a risk?
Right. Thanks, Wilson. So I think what fintech does is introduce a lot more access to different asset classes that Malaysians previously did not have access to. So things like investing overseas in multiple asset classes with these is one of them. Access to cryptos is another. I will say that access is definitely a good thing, and efficiency in terms of getting the barriers to entry very, very low, so people can start, so people can reduce costs, will definitely help you get better returns if you compare apples to apples. If you invest in a regional or global unit trust with its layers of fees, you will definitely get charged a lot more, and therefore your net return will be less. 5% sales charge and then 2% management fee. So if the gross margins were the same, you definitely save more using a fintech provider, right? Even our own EPF has a digital channel. it has I invest for you to take out of EPF and invest in some of the unit trusts that you have selected. So I think digital channels, digital platforms definitely help you get better returns in terms of saving fees. So when you talk about increased risk, I will say that there is a new generation of platforms out there. And with that, a new generation of scammers and a new generation of suckers. So you don't really want to fall in any of those categories, obviously, right? And the easiest thing to do is to make sure that whoever you are transacting with, they are licensed, right? So it might get a bit gray in certain spaces, but if you want to be regret-free, just transact with those who are licensed. We are licensed wherever we operate. You know, in Singapore, we're regulated by the Monetary Authority of Singapore, here by the SC, Dubai in DFSA. And if you don't, basically you're putting yourself up to different kinds of risks, right? So there are reputable guys out there who are marketing in Malaysia but are not regulated here. So it's up to you whether you want to take those risks. Don't cry to me if anything happens to you, right? And I think the physical insurance and all that is definitely overblown as well. I'm sure we've all heard of physical scams and all this, Geneva Go, it all exists, right? So having a branch, having a well-dressed person in a suit come and talk to you are all very overrated. These people can disappear as well. So protect yourself. Long story short, transact only with those who are regulated.
All right. Thanks, Ken. I think the key main points that you have mentioned is number one, by using fintech platforms, the cost of investing is lower, right? The cost of the business is lower, and with that, indirectly or directly, the return will be better. And of course, secondly is, I think this is very important, transact or use licensed platforms. Now, I personally run a fintech startup, and I understand how strict or stringent the requirements to be licensed, and especially in Malaysia, for all types of new assets is much more safer and secure to transact with the licensed platform. So Aaron, I would like to ask you on this same point. So is it true that users are able to obtain a higher financial return, especially if they dabble into crypto, NFTs and DeFi and all of this? So what does it mean? Because every other day the crypto market moves so fast, right? And the movements are rapid. So is it true that the financial return is greater and hence the excitement in the market? And how does one keep ourselves abreast with all this new development with the intent to safeguard our investments if one chooses to dabble into crypto investments?
Yeah, first I want to say that I'm so glad that everyone on the panel is like licensed and approved and regulated. So to your question, right, Wilson, I think digital assets is like super exciting for a lot of people. And to be honest, if you wait for regulation in the world of digital assets, it might take like a few years, right? For example, we are seeing huge things in the space of DeFi, and for regulators to actually draw regulations around things like DeFi, who knows, it might take another 3 to 5 years when DeFi has already been long forgotten. So if you look at the fundamental principle of something you mentioned about risk, right? I think that the internet, fintech, or digital assets has just broadened the number of options for people to try and invest, or a lot of people are actually doing it as speculation. So as to whether that is higher risk, I think it is actually a matter of personal responsibility, because when you don't have regulations covering you, then it is like the wild, wild west already, right? The amount that you stand to gain or you stand to lose is literally completely up to you and your knowledge of the industry. So I think for a lot of people, if they are trying to speculate or do this, it is important to recognize what you're doing, to understand the difference between A, investing, B, speculating, and 3, maybe downright gambling. And if you decide for yourself, I'm willing to gamble with 1%, and I'm willing to speculate with 5%, and I want to invest 95%, then that is up to you, right? It's a personal responsibility. I don't think anyone can tell you what to do. But you know, the short answer to all this is, if you want to be relatively safe and you want to stay away from the scams and all the dodginess of whatever happens, then use a regulated platform lah. That is your heuristic or your shortcut, right? If you don't know how to navigate the mess, as probably 99% of us don't, then just stick with the regulated platforms.
Yeah, thanks, Aaron. You know, you were talking about personal responsibilities. In fact, it's really true. Investing is a personal choice. It is a personal responsibility. And of course, you were talking about diversifying the right by using the right portfolio management tool or strategy, by putting or spreading the risk or investment into different assets. So this leads me to my
Sorry, Wilson, just to add, right? I think with regards to fintech, right, it's just the evolution of the banking industry, right? I mean, let's go to a more traditional industry, like fashion industry, right? I mean, when the fashion industry, like when your players like Zara, like, I mean, it was very seasonal, right? Then when your players like Zara and H&M came with fast fashion, they were just changing like every 2 weeks, and people were like, okay, is this the fashion industry? And then it started switching online, right? When ASOS came, right? And then you've got Zalora now, and the same, everybody's like, no, I can't go and order clothes online. It might not fit, you know, it doesn't work like that. You know, who knows, it might come, I mean, the wrong size will come, and there's also a risk inherent to that industry. What? In fact, until now as well, like, I know there's a lot of fashion scams happening, like you can get a Ray-Ban for like 10 ringgit, you know, go and click this link, and people still get scammed, right? The only thing is, I guess, when people talk about finance, yes, because it has to deal with your money directly with your bank, so then people talk about regulations. But I think it's just an evolution of the banking industry, and you have to, obviously, scammers are out there as well. In the fashion industry, they're still there, right? I mean, how many people come and say, oh, you can get a suit for X price? You go and literally fit the suit and come back and pay, and then the shop goes missing, right? It still happens, right? So I mean, banking industry is just evolving, and I think fintech is just something that's an evolution within the banking industry lah. And you just have to be careful lah. I mean, obviously, because of fintech, you're not buying anything tangible. You're transacting everything online, so it's always, you have to know your risk and be careful, and ideally, you know, invest with the regulated companies, and just don't go and invest like everywhere lah.
Yeah, I'm glad that you raised out this point, Ben. So running on this note, right, as you chart the growth of ipaymy, can you share with the audience, right, what actually goes behind your mind when it comes to providing the right values to your user, to the market you serve? Because eventually, I think all of us, we can agree, whether we are tech or in non-tech, the ultimate solutions that we provide must add values and must solve pain points to the users.
Yeah.
So perhaps you can run us through in terms of the thought process.
Okay, so for us at ipaymy, what we're exactly trying to do is we are enabling the, I mean, business owner or individual to access their pre-existing credit, right? So usually for a business owner, I mean, if you have like pre-existing credit in your credit card, right? But they don't have the option sometimes to pay for like their, you know, inventories or even their business expenses using their credit card. And what happens is sometimes their credit, which is already approved, it's just unused. And when it comes to a situation where, okay, you know what, they just want to extend their cash flow, they probably have to go for conventional lending products or even unconventional lending products, which a lot of businesses end up doing. So what we are doing is we are more about enabling. I think what we're going to do is enable individuals and also business owners to access credit that they already have, but it's just that they're unable to use because certain businesses just don't take card payments, and, you know, it kind of locks up their credit.
All right, thanks, Ben. I would like to ask this question to Julian. Julian, just now you were mentioning, you know, since you spent quite a bit of time in the market, and you did mention about there were a lot of not so right investment decisions back then, right? And I believe this question would be very much relevant to a lot of the new investors out there who are trying to dabble into the investment arena. The question is, how can we take advantage of fintech right, to number one, kickstart our financial wellness journey. So this is the first question. And number two, for those who have been investing, in the past 5 years, the past 10 years, even family offices, right? How they exponentiate their financial wellness journey by leveraging fintech?
I think fintech is there to give you a chance to autopilot your whole financial journey. And this is a very profound disruption, right? It's a total paradigm shift from what we had before. For example, from, let's say, unit trust investing or even stock investing, where you need a lot of work, all right? There's a lot of, in terms of the carbon footprint of the work you need to do to get yourselves into those investments and to get access. It's a lot of work. So fintech is here to disrupt that and to make it very easy for you. And the first thing that you have to do to what you call, make your investments exponential is to autopilot your whole thing, because the autopiloting gives you the chance to multitask, right? You no longer have to be so active in your investments. It's just passive, right? You put it there, you get it done, and it's on autopilot. And therefore, you get to be active in the other areas of your life and possibly more important areas of your life, because one shouldn't do investments if it's not their full-time job. Because investing is a full-time job, right? If you don't go full-time, you will lose money. A lot of people will lose money. And recently, when SC released their reports, and you mentioned that retail participation became higher, SC was, I think, kind of happy to report. But actually, that's not a good thing. The higher the retail participation, actually, I think the worse the productivity of the economy will become, because that would just mean that people have nothing better to do than to play the stock market, right? So you don't want a situation where people are required to play the stock market as a form of survival. You don't want that, right? You want to be able, like getting into a plane, the pilot pilots the plane. Even for the role of the pilot, a lot of that journey is also autopiloted. So even the pilot's job is autopiloted, right? And you just sit in the passenger. Like, you don't want to go into the cockpit and mess around. I think that's the disruption and the paradigm shift that fintech can bring about, and it has very profound rippling effects into your life, into your habits, into your lifestyle, because you don't have to deal with it anymore. Now, the second thing I want to say very quickly about that is that you are making your life grow exponentially. You're not trying to make your investments grow exponentially, because statistically, that is very, very hard to do. You need to be full-time to be able to do that. And out of all the full-time people, including the professionals and the amateurs and the hobbyists, right? When they go in, most of them don't do well. If SC actually released data on retail trading accounts, personal trading accounts, we would be able to see, that will become crystal clear. That data would show that actually retail investors don't do well. So I think make your life exponential by autopiloting your investment, but don't try to attempt to be too active in your investment, just with the intention of trying to get exponential returns out of your investment. The easier way to do that is that if your career gives you a lot of dividends, your career dividends, that has an exponential effect on your investment, because you can then channel more savings to your investment. You can continue working. You can multitask. Your investments are autopiloted.
Right. Thanks, Julian. There are a few very insightful points to be taken, right? And I think this is also a repetitive theme in the past 40 minutes, where all of your sharing is essentially concentrating that for fintechs to thrive, or our investment return to grow, one must be, number one, make the right decisions when it comes to investment. And there is quite a lot of heavy reliance in choosing the licensed platforms, because our risk can be minimized, assets can be safeguarded. The second point, which is also very interesting, is that investment is a full-time job. So if your full-time job is not in investing, one is better off to choose an automated platform or trusted solutions to help manage your investment. And I think the third point is very profound, because we are here to create value, right? And value creation can take place in many forms. If one is able to do well in our professional career, in entrepreneurship, with the active income that we generate, we can also channel this additional disposable income into investments. So this then link me to the next questions, right? I would like to ask this question to Ken. Fintech, or in your case, robo-advisory has started in the Malaysian market for 5 years, and especially last year during MCO. And again, in the recent SC annual report, I believe there are a lot more users who have dabbled into robo-advisory platforms. So I would like to hear from you the good things and the not so goods, right? What are the pros and cons of fintech solution when it comes to achieving financial wellness? Is there anything that we need to take note of as a user?
Yeah, absolutely. So I think last year the Edge did a survey, and after unit trust and stocks, robo-advisors is the most popular investment destination. And I think everyone in this space will be beneficiaries of people saving money and essentially looking towards investing. Unfortunately, it took a global pandemic to show us that we can't be, we can't be, we always must have an eye on our investments, and it only takes a certain external event, whether it's personal to you or not, to actually derail you. A lot of people lost their jobs. A lot of people lost money in March and April, and they did the wrong thing by selling at the worst time. So I think that last year had showed us a lot of learnings. We recently came out with a report called StashAway Insights, and actually the people that sold within the 6 month period of the pandemic made a average return of -5 to 6%, whereas those who continued to invest made an average of 10%. And while you say maybe 10% is a bit average, I would say that in a bad year, 10% is great. And if you take the underperformance, it's actually a 15% spread, which is great. So I would say that there's going to be a lot of noise, and there's going to be a lot of large external events that will force you to relook at your financial setup. But it's also better to just have it right from day one and look at different platforms to suit your specific needs. And once you do that, just maintain the long-term investing, and ultimately not look at too short-term or too tactical or too faddish things ultimately. So I will say that fintech is an enabler. It's meant to be there to really help you get access and to help you spread your wealth in ways that we could not have before. So ultimately, I feel like based on what you've said, people would have made that shift, behaviorally speaking, ultimately put their lives on track, right? I do think though that those who want a quick buck will continue to be tactical, continue to want to be lucky, and by and large, for those people, I just have to say good luck, because there are stories that they make money, and there's stories where you don't make money. Unfortunately, you don't really hear too much stories of people who screwed up last year. You don't hear people who joined the rubber glove rally too late, the Tesla rally too late. So you don't hear from these people. You hear from people who make money. You see them at car dealerships. You see them at real estate property launches. But those people that didn't make money, you won't really hear or see from them. Just now, Julian said something about SC releasing the stats for retail investors. I have more global benchmarks. So, for example, there's this guy called Anton Creel who was on BBC, and he actually teaches people to trade and become hedge fund managers. and he says that the cards are stacked against retail investors. 90% of people actually lose money from day trading. And then a very famous global but unregulated in Malaysia platform also says on their own website in the FAQ section that 65% of their users actually lose money. So be aware, right? Be very, very cautious. Yeah. So yeah, I think that pretty much says it all.
All right, thank you very much, Ken. Thanks for sharing on the global side of things as well. I would like to ask these questions to Aaron. Right, there's this saying, right? There's never a boring day in fintech, and I think this phrase is even more apt if I rephrase it to say there's never a boring day in crypto, which is live 24/7. Right. So, as a platform provider, operator, what are some of the new trends do you see in fintech or crypto at large for investment or even protections? And do you think that these solutions are going to stay?
Yeah, I think the biggest trend that we are seeing today is more and more institutions who are starting to hold Bitcoin as their, whatever they call it, right? People call it a hedge against inflation. Some people call it something like a asset class that has a very promising capital return. So for whatever reason, some of these more prominent some of these more prominent institutions are starting to get involved. And the thing is, for most of crypto's history, digital assets history, it was retail individual customers who were buying. And I think the sort of big pivotal moment shift happened last year when I think some of the more prominent hedge fund managers and also MicroStrategy CEO, he bought into Bitcoin. And then since then, we started to see like Norwegian billionaires, Norwegian oil companies, Tesla, Square start to invest some of their assets into Bitcoin. So I think that is the one I want to point out, because I do think that is perhaps going to be more of a lasting trend. Now we can talk about things like NFTs, and we can talk about things like DeFi, but I think the jury is still very out on that. I mean, you don't know what's going to happen to that, right? It could easily go down the road of the ICO. In 2017, everyone was doing ICOs, and today we see that maybe 90-95% of those projects have failed. Yeah. So again, NFTs, DeFi could still go down that road. And I think if you look at Bitcoin itself, that's where most of the major interest or major shifts are still happening. Despite all the hype you see in the media, I think Bitcoin is still where you need to be watching out for.
Yeah, thanks, Aaron. And there's one Q&A question asked by Franklin. I think that you have answered the question earlier. So I'm just summarizing up. Essentially, his question is, would you consider investing in the cryptocurrency? Do you think it's safe? Am I prone to a higher risk instead? And should I invest in safer options like unit trusts or stocks? So sum up very well in the earlier response, saying that eventually it's about portfolio management, right? If you are able to evaluate your own risk profile and to put a large segment of your assets into the more secured assets in licensed platforms, and a certain segment can go into different asset classes as well. Do you want to add any points on this?
Yeah, I think it's important also that this kind of decisions should not be made lightly. These kind of decisions are important decisions because they are to do with your money, right? And if you do your own research and you have some doubts, it might be worthwhile reaching out to a licensed financial planner, someone who can actually give you like technical license advice. Because when you come to a platform like us, we can't actually tell you, oh, you should buy now, you should sell now, you should buy 5%, 10%, right? I think we are just the enablers of the technology. And if you have doubts, it may be wise to look at it as a whole of your investment or your whole money strategy. Don't look at it like, can I make 5x or can I make 10x? Because I think that's a very narrow way of looking at investing.
Yep. And of course, like what you were mentioning, if they are looking into the overall portfolio, it's always good to reach out to someone who can autopilot your investment. And here we are, we have AKRU and StashAway who can autopilot your investment strategy and also return for you. We also have another question from Dave from HomeCrowd. Do you guys think the NPL segment, which is growing so rapidly, will affect one's financial wellness, and does it require regulation such as what is being undergone in other fintech segments? I'd like to direct this question to Ben, because Ben, you were also talking about transparency, choices, right? You talk about e-commerce market, how is it transforming so rapidly? And of course, BNPL to some extent, it helps relieve cash flow, it helps giving access for consumers to buy more stuff. But more importantly, do you think that it affects one's financial wellness, and how would oneself go about it when it comes to BNPL?
I mean, I don't think there's anything bad about BNPL. It's just enabling people to, pay in installments. I think paying installments has always been available, right? It's just, again, it's just a more transparent pay in installment method, right? I think in terms of one's financial wellness, I think pre-BNPL also people go and buy a lot of things in installments and don't end up paying up, right? So I don't think it's ever going to change. I think when it comes to financial wellness, it's how you manage your own finances. Again, like what Aaron, Julian, and Wyken have been saying, right? It always comes, even investing, it's about your risk profile, right? How much are you willing to take, and what's your investment horizon like, right? Same thing with borrowing as well, right? How much of leverage are you willing to take, right? There are many businesses, companies that have borrowed in banks, over leveraged, and they've wound up, right? So it's same individual. End of the day, if you're going to buy now and pay later, or buy things in installments, you need to know how much of leverage you're willing to take, Don't overbuy something that you cannot afford to pay back, That's one.
Yeah, thank you very much, Ben. So we are coming to the tail end of the sessions. Before we conclude our forum discussions, I would like to invite all panelists to essentially sum up and give your concluding remark when it comes to the topic of today. How do we achieve financial wellness via fintech solutions? And today we have a very diverse set of panelists from all different segments of fintech background. So I would like to invite Ken to start. In a nutshell, how do we achieve financial wellness via fintech solutions?
Yeah, I think all of us represent different platforms that may add value to your lives, whether it's enabling you to invest overseas in a diversified and automatic manner. I just want to end by focusing on one point, which is conflict of interest or alignment of interest. Really look at platforms that seemingly want to market you something, but you have to decide for yourself whether it's a click or whether you're aligned. If you sign up for a retail broker and they're asking you to look at signals, to look at trading, they make money from going in and out. They don't make money if you buy long term. So therefore, therein lies a conflict of interest, and you shouldn't fall into whatever marketing spiel that everyone puts out there. Right? You have to decide for yourself whether this thing really helps you in your life or not. If you think about a unit trust agent who only wants you to switch when the markets are down into a bond fund and then back into equity fund in the good times and have a switching fee along the way, there's no more there's no more alignment of interest, there's conflict of interest. So decide what your interest is and use the best platforms out there to execute your investment strategy. Otherwise, you'll be another consumer where you will have a pipe put down your throat and all financial products will go inside and you'll be very bloated and you won't be there with me and other people on the crowd here at the financial freedom finishing line.
Right. Thank you, Tang. What do you think, Julian, when it comes to so there's also discussions by Andrea coming in. So if you could take on this question at the same time summarizing up, because it's read to Ken and you, in fact, do you think that an increase in robo-advisory platforms may disrupt the online equities broker industry? So perhaps you want to give a sense of thought on this and at the same time summarizing the theme of today.
Actually, the broking industry has got very low retail participation. It's just that recently the numbers show an aberration because of the COVID that happened last year. So people had more time to go online, and the broking industry actually benefited from it. Separately, we also see the new online apps like Robinhood and so on, and together with the versions coming out of China, those are increasing the quality of user experience compared to previous broking experiences, and I think that's dangerous. Those just now you asked pros and cons of fintech, right? This is the con. The con actually in more ways than one. The con actually gives you more opportunities to actually do something wrong and lose money. But I think in summary, what people should do is to use fintech. Today, more than ever, you can use fintech to make your life better. You should free us from those things that you needed to do before. Like in the old days, stockbroking was so glamorous. It's so glamorous to have a stockbroker. Actually, today, no need anymore. You can focus on your job. You can focus on your friends, your family, your travels, and so on, right? So fintech is just one aspect to allow you to forget about doing too much work in investing, just as some of the other industries have also done, like what Grab has done for cars, what NB has done for travel, the budget airlines have done for travel. You don't need to worry about those things anymore. And that is wellness, so that you can focus on the things that give you happiness. Yeah.
Thanks, Julian. Aaron, would you like to give a concluding remark?
Yeah, I'm very much aligned with what Julian said, and I almost feel like I'm a disciple in philosophies. But maybe I'll just put it in my own words. I think, especially for the younger generation, what we don't often realize is that time is our most valuable asset. And you think that you have enough time to try and manage 5 stockbroking apps and 3 cryptocurrency exchange apps. And you think that you're going to be this hotshot trader that makes money across everywhere. And we know statistically that this is highly, highly, highly unlikely for anyone to be able to pull it off. So I think the good thing of fintech and how it helps us achieve financial wellness is it allows you a great degree of automation. So, try and think where you want to be focusing your Saturdays and Sundays. For example, spending time with your family, eating with your friends. And then for the rest of your investing needs, I would hope that you can automate it using fintech solutions. And then I think that's a very good and well-lived life, if you ask me.
All right. Thank you, Aaron. Last but not least, Ben.
Yeah, I think I resonate everyone now. I can Julian, Aaron. I think not only investment. I think with regards to fintech, also you have more options of even financing needs, right? So I think we always hope, of course, there are risks inherently involved with investing and also lending. But I think the good thing about the fintech solutions is it's a more transparent approach, right? Like what I can say, right? I mean, whether there's a conflict of interest or not, right? So I mean, back to the earlier example, when a banker gives you a home loan, they throw in a MRTA, same thing, right? In the fintech world, you can avoid these kind of things when it comes to financing. So yeah. Ideally, I mean, expose yourself to fintech solutions, but know your risks before you step into your journey of reaching financial wellness.
All right. Thank you so much, all the panelists. And if I may sum up, the 3 key points shared by all of you. Of course, there are a lot of nuggets of wisdom shared by Ken, Julian, Aaron, and Ben when it comes to achieving financial wellness via fintech. But there are 3 key points that I could summarize, if I may. So number 1 is really about valuations. Our lives are not just about investing, but of course, more importantly, is to have a wholesome life, which is fulfilling. And this requires one to put focus in areas that one is good at. So if you are really good in your professional career in entrepreneurship, continue to deepen your skill sets to achieve more active income, and of course to create more values, and hence you are able to channel additional disposable income into investment. And number two, with the advent of fintech, one is able to lower down the average cost of investing. It's more convenient, and the word which is repeatedly mentioned, autopilot, right? They leverage on these platforms to autopilot your investment, whether it is through a robo-advisory platform, whether it's through a digital investment platform. So there are a lot of leverage and tools that one can use today because of fintech. And last but not least, very importantly, and this is stressed again and again by all of you, it's really about risk and portfolio management, right? One has to be able to diversify your assets into different portfolio. And the number one advice was given at the start is to deal with a licensed platform so that our risk is able to be minimized, and of course, our interests will be able to be safeguarded. So with that, thank you everyone again. Thanks Wycan, thanks Julian, Ben, thanks Aaron for spending your lovely Sunday morning with us. And thank you to all of the participants for tuning in.